Top 3 most undervalued cryptos right now. Let's get real. The altcoin market is sizzling, with plenty of projects already blasting near or past their all-time highs. But most of these late movers are way too hot and way too close to already baked-in gains. This cycle's trick is spotting the coins that still have serious upside, projects that have not popped yet, but are poised to explode, thanks to tech upgrades, big launches, and institutional demand that have all been building behind the scenes. So how do you find these diamonds that are buried in the heap? First off, we look for the tokens with massive fundamentals, but have compressed prices. Chains that are gearing up from major updates, ecosystem growth, ETF talk, or undervaluation compared to their previous peaks, it all counts. And today we are spotlighting 3 such picks: Cardano, Avalanche, and Apecoin, as well as walking through exactly why they are all undervalued right now and what bulls may be missing. Welcome back to another episode of JRNY TV. My name is Nick, and today we are diving into the 3 most undervalued cryptos right now. If you felt like most altcoin headlines carry empty hype, this is the episode that's going to give you something real to watch. Fundamentally strong plays with real catalysts that are ready to fire. Let's take some time to drop in and see why these 3 are about to re-emerge in a huge way. Cardano, ADA, deep discount and institutional backing. ADA is one of those projects that always finds its way back into the spotlight when the market heats up. But what's really interesting right now is how undervalued it looks compared to its fundamentals. ADA's previous all-time high was around $3.10 in 2021, and today it is trading closer to 90 cents to 92 cents, meaning it is still down over 70% from its peak. But unlike 2021, Cardano's ecosystem is far more advanced today. The chain has rolled out smart contracts, launched sidechains, and has major scaling solutions like Hydra, which theoretically pushes throughput into the 1 million transaction per second range. On top of all that, the community just voted to deploy 96 million ADA from its treasury fund to infrastructure upgrades, including Project Acropolis, which is focused on improving Cardano's node architecture for future adoption. These are not vague promises. They're concrete steps toward making Cardano one of the most scalable blockchains on the market. But what makes ADA even more compelling is the increasing level of institutional recognition that it's receiving. ADA, or Cardano, is currently one of only 3 assets identified as mature in the US government discussions on crypto regulation, a classification that adds a layer of legitimacy few altcoins can claim. At the same time, Grayscale has already registered a Cardano trust in Delaware, setting the stage for deeper institutional exposure. Meanwhile, prediction markets like Polymarket are giving over 80% odds that a Cardano ETF could be approved by the end of 2025. And that's a massive deal, because once the institutional capital begins flowing through the ETFs, liquidity spikes in retail, it tends to follow quickly. The on-chain data paints a very similar story of quiet strength. There are now 1.25 million active staking wallets, showing long-term holders are now continuing to accumulate ADA even during periods of market stagnation. Large ADA whales have been increasing their holdings as well, a sign that smart money is quietly positioning ahead of a potential run. You combine that with real-world use cases like Atala Prism in Ethiopia, where Cardano is being utilized for a national student credential system, and you're looking at a project with both speculative upside and actual global utility. If ADA were to simply retest its previous all-time high, that's already a 3x move from today's levels. But given the new developments, the regulatory clarity, potential ETFs, deeper institutional trust, and a very strong ecosystem, much stronger, may I add, many analysts now believe that ADA has the potential to surpass that high in the next cycle. And that makes ADA one of the clearest examples of an undervalued major altcoin in today's market. AVAX, Avalanche, DeFi exploding, tokens burning, and still undervalued. Let's talk Avalanche, and not just as another smart contract platform, but as a deflationary engine positioned for a breakout. Right now, AVAX is trading well below past highs, down roughly 70% from its 2021 peak, but yet everything under the hood is screaming underpriced. Since the launch of that Octane upgrade, Avalanche's DeFi ecosystem has exploded. The total value locked surged 37% quarter over quarter to reach 1.5 billion, with USD TVL at 2.2 billion and over 70 million AVAX locked in protocols. Daily activity is also on fire. Daily active addresses rose 210% and transactions spiked nearly 170%, averaging 519,000 users and 10 million transactions per day. We're talking mainstream level activity returning aggressively, not quietly. Meanwhile, AVAX isn't just seeing more action, it is burning aggressively. Avalanche burns 100% of C-chain transaction fees, and because of new inscription features, ASC20 tokens, the burn rate has gone through the roof. On-chain data shows AVAX is currently burning approximately $12.65 worth of AVAX every second, potentially removing hundreds of millions in circulation annually, and that is deflation baked into the chain. No staking burn, no vesting burn, just pure protocol mechanics attacking the supply. The technicals are starting to catch up with the fundamentals. AVAX has broken out of a multi-month descending channel, rallying 30% in the past month alone, outpacing broader crypto gains and shaking off macro fears. Analysts are now pointing at wave structures and bullish setups targeting $35, with even stretch goals near $50 to $80 if the momentum continues. Long-term models, they show 2025 highs in the $35 to $50 range, with 2026 potential up to $70 or even higher if adoption continues to accelerate. To sum it all up, Avalanche is delivering real growth, massive DeFi engagement, growing enterprise adoption, deflationary tokenomics, and rising technical trends, all while the price lags significantly behind its true value benchmark. You compare that to other large cap altcoins, AVAX, it looks deeply undervalued right now. Apecoin, undervalued utility with metaverse firepower. All right, let's take some time to talk about Apecoin and how it's gone a little quiet, but maybe for the best reason just yet. Ape is about 63 cents today, nearly 98% below its all-time high, near $28, and barely costing more than pocket change. But under the surface, there's a metaverse story that is waiting to snap back to the forefront. This isn't just about speculation. It is about latent utility and structural upgrades that could in fact reignite the token's narrative power. But here's what's lighting the fuse. Other side metaverse, built by Yuga Labs, is finally operational, and Ape isn't just a ticket. It's the economic backbone. The network just migrated NFT staking onto ApeChain, their own layer 2, along with advanced shadow staking mechanisms, aiming to ride idle NFTs for yield without bridging hassle. That alone speaks to enhanced utility and game mechanics that could spark renewed demand, and fast. You add that to Yuga's shifting governance with the Apeco proposal to replace a slow DAO structure, signaling renewed strategic clarity for the ecosystem, and a steady burn of supply out of circulation as staking incentives continue to stabilize. Volume trends are also picking up. Ape trades over 30 million daily, even as the market remains quiet. The community sentiment appears rested, but with meta fundamentals returning, things could get spicy. Put plainly, Apecoin is a red-hot undervalued token disguised as a meme. With better utility, governance overhaul, and a meta infrastructure finally live, it's poised to regain narrative and utility in a market that is craving cultural plays. Finding the next undervalued gems. Now let's zoom out for a moment. Cardano, Avalanche, and Apecoin are three of the clearest undervalued plays right now, but they aren't the only ones in the room. The bigger question is, how do you actually identify the coins that are like this before they run? The strategy is less about chasing that hype and more about recognizing where the price does not reflect the fundamentals. That means tracking the projects with active ecosystems, upcoming catalysts, or suppressed sediment. All because when the market tide turns, those are the ones that reprice the fastest. A solid way to approach this is by comparing current valuations against previous all-time highs. If a project has grown its user base, revenue streams, or institutional adoption since then, but the token happens to be 70 to 90% below its peak, that is a glaring signal. Avalanche fits this mold perfectly with surging transaction counts and burn mechanics, while Cardano is more decentralized and battle-tested than ever. Apecoin is another example. Its utility is expanding, but its price has not caught up just yet. Do not overlook the macro conditions either. With ETF approvals rolling out, institutional money now piling in, and retail starting to wake up, undervalued projects, they can flip quickly. We've seen it time and time again, but it's less about finding the perfect project and more about positioning early in the ones that have proven staying power, strong teams, and upcoming catalysts. So do your own research, because if you stick to that framework, you won't just catch the obvious plays. You're going to be ahead of the herd when the next wave of altcoin rotations begin. Wrapping it all up. So here's that bottom line. Finding undervalued crypto plays isn't just about throwing darts at a board or chasing whatever is trading on X. It's about spotting projects like Cardano, Avalanche, or Apecoin that have strong fundamentals, clear roadmaps, and massive upside compared to their suppressed valuations. These aren't just hype tokens. They've got communities, adoption, and real progress behind them. And that's why institutions and smart money often circle back to them when the market tends to heat up. The trick now is the timing. Altcoin season is knocking on the door hard. Bitcoin dominance is slipping, and retail is starting to pile back in fast. If history repeats itself, undervalued projects will be the ones that explode hardest because they're playing catch up. The opportunity is right in front of us. You just need to decide if you'll be positioned before the herd comes rushing in. At the end of the day, whether you're working with $1,000 or $100,000, it's about having a plan, a strategy. Diversify, stay patient, and look for that project or those projects that are building, not just hyping. Because when the market really takes off, those undervalued gems will become the stars of the next bull run.